Hello and welcome to this week's Trading the Trend on Wednesday, the 17th of May 2023. A couple of weeks ago, we went short natural gas. As you can see here on the daily financial bet of natural gas, we were actually right. The price of natural gas when we went short at $2.37 went down all the way to retest the mid-April low. But since then, it has risen again. So unfortunately, we didn't hit our downside target at $2.05. And instead, the price of natural gas has risen again. And intraday touched our stop loss level, which was slightly above the April high at $2.57.50. So that stop loss level is still in place, but it is to be triggered on a daily chart close above it. So since we haven't reached that yet on the daily chart closing basis, this trade is still ongoing. And last week, my colleague Sean Morrison kindly filled in for me, and he went long the Nasdaq 100 on a break above the early May high at 13,290. And basically what I would like to do now is to cash in profits on this profitable trade of around 150 points if we get out now at 13,445. The reason being, technically speaking, as you can see here, yes, we're making a series of higher highs and higher lows, but we're losing upside momentum and we're forming this wedge formation. And since the negative divergence here on the relative strength index is not confirming the new price highs, it is possible that the Nasdaq 100 may in the next few days return to the downside. And therefore, I'd like to get out of this trade, especially since the US is still discussing its debt ceiling. And if no agreement is being reached by the two parties before the 1st of June, the US will be in default. So that could lead to a lot of volatility with regards to the Nasdaq 100. Hence, it's probably a good idea to get out of our profitable trade here on the Nasdaq 100. So let's go to this week's Trading the Trend, and it is to go long orange juice. As you can see here on the daily financial bet, the price of orange juice is starting to rise again off its $238.07 low made last week. And here we basically seem to be resuming the long-term uptrend since the beginning of the year. And we have just had this ABC Elliott wave correction take us down to the low last week. And I expect further upside to take us towards the $300 mark. So today's Trading the Trend would be to go long orange juice at around current levels, around $254. With a stop loss at $238.05 and an upside target of around $290.